welcome to the World Battery Metals and Mining News for the 20th of August 2024. Weir Group awarded £53 million flowsheet contract for Reko Diq project. Weir Group has snagged a £53 million contract to furnish energy-efficient flowsheet solutions for Barrick Gold's half-owned Reko Diq copper-gold project in Pakistan's Balochistan region. This greenfield marvel aims for first production in 2028 and boasts an impressive mine life of at least 40 years. The hefty contract will see Weir provide top-tier fine grinding, separation, and tailings equipment, including their heavyweight high-pressure grinding rolls, HPGRs, designed for the region's challenging water scarcity and geology. The initial £53 million will filter into the order book over time with immediate and future recognitions. Not stopping at mere equipment, Weir will also offer ongoing support with a custom-built service center on site, showcasing their commitment to sustainable and economical mining solutions. Both Weir's John Stanton and Barrick CEO Mark Bristow lauded the partnership, highlighting its innovative response to the environmental and geological demands of Reko Diq. Let's hope this isn't just another PR charade, but a real step forward in sustainable mining, though the skeptics among us will be waiting for the inevitable technical difficulties announcement down the line. Arab Gulf states double down mining efforts. The Arab Gulf states are increasingly turning to mining and mineral processing to diversify their resource-dependent economies, moving beyond just oil and gas. Bahrain is negotiating with Nornickel for a potential platinum group metals refinery, while Qatar's sovereign wealth fund is putting $180 million into TechMet to secure responsibly sourced critical minerals. Meanwhile, Oman is ramping up its copper mining operations with multiple new projects, and Saudi Arabia is making substantial legal and financial strides to bolster its mining sector. This includes hefty investments in copper and gold exploration, midstream processing facilities, and even electric vehicle manufacturing, thereby aiming to become a central hub for global mining supply. The UAE's approach contrasts slightly by securing joint ventures and mining concessions abroad, particularly in Africa and Latin America. Across the region, strategic investments and infrastructure development are laying the groundwork for significant contributions to the global mining sector. This collective push into mining signals an astute shift, ensuring these nations remain critical players in global resource management. Anglo American to receive coal bids in September. Anglo American is about to open bids on September 9th for its Australian metallurgical coal mines, including Grosvenor and Moranbah North, despite a recent fire at Grosvenor. This is part of a significant restructuring effort post a failed takeover bid from rival BHP. The expected $5 billion sale has attracted interest from major players like Glencore, various Indonesian companies, and China-backed Yancoal, all eyeing the assets to bolster their positions in the coal market. Glencore, despite past shareholder resistance to spinning off its coal unit, might find these assets tempting if priced right. Similarly, Delta Dunia from Indonesia, eager to grow via acquisitions, and Yancoal, flush with a billion-dollar war chest, are likely contenders. The competition underscores robust demand for metallurgical coal, especially in Asia, despite all the green pandering. E3, Pure Lithium, to test production of lithium metal batteries from Alberta brine. E3, Lithium's partnership extension with Pure Lithium marks a pivotal step in advancing lithium metal battery technology. The two companies, who've been tangoing since mid-2022, have signed a new deal to develop an anode and battery pilot plant in Alberta, alongside a preliminary economic assessment for a commercial facility. Essentially, Pure Lithium's impressive tech, capable of crafting high-density lithium metal cells minus the usual nickel, cobalt, or graphite, will be put to the test using E3's lithium brines. With a focus on creating a consolidated supply chain from brine to battery, this duo aims to build a pilot facility near Calgary, leveraging E3's DLE technology from their Clearwater project. This could churn out 200 kilograms of lithium metal anodes annually for next-gen vanadium rechargeable batteries. The collaborative effort simplifies production processes by bypassing lithium salt intermediates, which, in layman's terms, means potentially lower costs and higher efficiency. a refreshing turn of events within an industry often mired in complexity. Shares of E3 Lithium jumped over 10% upon the news, albeit in a market where actions often speak louder than stock ticks. Chile's lithium output to reach 285,000 t in 2025, Copper Commission says. Chile's latest report from Cochilco indicates that the country's lithium carbonate equivalent, LCE, production is set to reach 275,000 metric tons this year and 285,000 metric tons by 2025. Despite this growth, the global lithium market is projected to experience a surplus, with an overage of 117,000 tons anticipated in 2023 and 191,000 tons in the following year. This surplus might make one question the market dynamics and governmental strategies around lithium production. How ironic that amidst all this buzz of promoting green energy, the market is swamped with a surplus, hinting perhaps at a lack of coherent planning or just another case of overenthusiastic projections. Peru's copper output this year likely to fall short of 3 militant goal. It seems Peru is slightly off the mark in hitting their copper production target of 3 million metric tons this year, with projections pegged at 2.7 to 2.8 million tons, much to the chagrin of the government. Victor Gobitz, head honcho of SNMPE and top brass at Antamina, revealed these figures while enjoying the Economic Forum in Lima. As the world's third largest copper producer, Peru's copper is usually a hot ticket in vehicles and construction, but lackluster output is curbing that shiny reputation. The first half of this year saw a slight dip in production, tallying 1.29 million tons, a smidgen lower than last year's performance. Peru's economic pulse has weakened, only barely growing by 0.2% in June, post a robust spring. Mining and oil aren't faring any better, plummeting about 7.5% in June, particularly bruised by a planned halting at Chinalco's Toromocho mine. Gobitz insists that keeping production humming needs hefty investments, around $2.5 to $3 billion worth. Antamina alone is seeing a steady output at 435,000 tons, cushioned by a $250 million investment in the first half of 2024, with the year-end figure expected to hit $700 million. Looking forward, Peru's government has given the green light to an environmental study at Antamina, crucial for maintaining production momentum from 2028 through 2036, with an anticipated $2 billion in investments. Antofagasta's half-year profit up on strong copper prices. Chilean mining giant Antofagasta saw a modest 5% bump in its half-year profit, thanks to elevated copper prices counterbalancing a dip in sales. The company's EBIT for the first half reached $1.39 billion, up from last year's $1.33 billion, though shareholders will see a lower payout of 7.9 cents per share compared to 11.7 cents the previous year. Despite a slight uptick in share price, analysts remain ambivalent due to the company's premium valuation and lackluster cash flow prospects. On the bright side, Antofagasta's projects are moving along smartly, with a second concentrator at Centinela ahead of schedule and expansions commencing at Los Pelambres desalination plant. However, the annual copper output is projected at the lower end of expectations due to poorer ore grades. With net cash costs forecasted at $1.70 per pound and a wavering copper price after its peak earlier this year, Antofagasta is keenly poised amidst the green energy shift driving copper demand. The uptick in demand, fueled by sectors like electric vehicles and AI data centers, positions copper as a pivotal commodity despite the recent price volatility.